which is client gave me a $95,000 job letter and they only make 50. Clients do that. Clients are doing that. I've seen a file recently.
But don't you guys take pay stubs as like proof?
That's a secondary proof. But pay stubs and job letter, you know how much it costs to make them?
Nothing.
Under $200, there's lots of people that will give you a job letter and pay stub, both match. It's the bank statements. Lenders are now going for 6 months bank statements.
Meaning, if 10 days before the closing, the lawyer has not got that bank instruction, meaning no good.
That is a problem. That's a good point. If 10 days before closing, your lawyer does not have instructions, I think that's time for you to sit down with your broker and ask in detail. And don't just believe. Ask them, let them show you where the file is and why it's not done yet.
10 business days or 2 calendar?
10 business days. Nothing in business, nobody counts calendar days in business. And Home Trust is the first lender that has started to push the closing date. In fact, most lenders now don't even send the mortgage instructions until the file is complete. They don't want to waste the time.
This is regarding the previous question. You said you can bump them up from a A lender to B lender hereafter. But would that be refinancing? Isn't that bad?
No, no. So, okay. So the question is, going from B lender to A lender, isn't that refinancing? Is it bad? There's no such thing as bad or good. At the end of the day, what you want is the client to be able to afford the home and have that. Now, how much can they afford versus what do they want to buy? There's two different things. Okay? Right now I'm struggling with a couple of realtor here where the client wants to buy 600 or 500, but they can't buy any more than 350, 390. And I'm not the one who will say, go and buy this much. I don't want to, because guess what? Every Tuesday I come here and you'll hold me to it. So, it doesn't work. Now, they can go to a B lender and go up to 400 instead of 360. But that's it. And for that, they need 20% down. 20% and closing cost, which includes 1% lender fee there. So a little bit more than 20%, not just 20.
Now, a year later, you say they can go to...
Yeah, they can go to the bank.
How much can fund? What's the cost?
So if you go for 1 year term, there's no cost. You're paying $1,000 to the lawyer to transfer.
So it would just change the rate?
It changes the rate and terms. It changes the lender. I've done that multiple times with lots of clients.
So they don't go to appraisal or anything?
They do the appraisals,
But
yes.
they do the qualification, qualify again, it has to do.
So
Go through that.
you have to go through that, but refinancing qualifications are easier. Because now the client has owned the property for a year, they paid a year's mortgage payment. The credibility added to the client is more.
So $1,000 plus 1% of the final.
No,
No, at the beginning when they paid.
at the,
Yeah.
yeah, at the beginning. For B lender,
Oh, for the.
for B lender. Okay?
That was the interest rate difference, right?
They will save interest rate.
No, whatever they paid in the first year.
Okay, yes, but remember, don't comment on interest rate. Interest rate client gets
Well,
based
that's
on their
possible, right?
scenario. Their income, their down payment, their credit. And so 360, so going to the same example, 360, they can get 3.69 or 3.59. And 400, they're paying 499. So the choice is theirs. Now, can you buy something for 360? Probably not. So what choice do you have?
They make it simple. $500,000 Let's assume this scenario, right? Be lender 1 year, and after that, going to the A lender.
Yeah,
What is the total cost for the client?
not a whole lot. Usually,
On
Four-
500,000.
usually $3,000 to $4,000. In terms of, when you calculate interest, lender fee, everything together, it's $3,000 to $4,000.
What's the process for retirees, qualification-wise, for mortgages, retirees?
You know what? Every lender is different. Some lenders give the entire 30 years. Some lenders will say, well, they're 70, life expectancy is 90, we're gonna give 20 years amortization. So it really depends.
But qualification-wise?
Same, everything is same. There's nothing different. There's no special circumstances for that.
Because if you don't have regular income coming in, but you have like 50% of, would that be enough to qualify them? Based on equity?
50% down payment?
50.
At 50% down payment, there is a mortgage, that's no questions asked.
But minimum would be,
So
minimum, what is the minimum would be?
now, minimum is of course 5%, they will still qualify. But how much will they qualify on retirement income is the concern.
It's the income.
Yeah.
So, based on, about all this, like getting what, this, you guys see like certain A-class mortgage coming back?
So you know what, that's a good question. Vendor take back. I have seen vendor take back work. Only in the scenario where the total lending is no more than 80%, including vendor take back. So let's say the bank is giving 70%, the vendor wants to have 10%, and that term has to match the mortgage term. So if it is 1 year mortgage, 1 year term. If it's 5 year mortgage, the vendor take back has to be 5 years. Cannot be 2 year, cannot be 1 year. And the client still needs 20% down.
What about the company? I think that is, met by the bank.
So bank gives you 70%. Let's say $1 million home. Bank gives you 700,000. You can have a vendor take back of 100,000, no more. You still need 200,000 of your down payment.
I thought you could
So-
do these second mortgages, like the vendor take back is like a second mortgage, right?
It's a second mortgage.
But
It
I
is-
thought under the new rules, you cannot do that.
Sorry?
I thought you cannot do that no more.
You can as long as it does not exceed 80%, and it has to be within 80%, including the bank and vendor take down. So you still need 20% down.
Yeah, you need it.
But let's say if the client, for instance, your client can only qualify for 65% based on the income, they can have 15% of second mortgage, vendor take back. They cannot have any more than that.
And the bank is the first one, right?
Bank is the first one. Yeah.
Always.
Well, the CRA is the first one.
On your earlier slide, you said the first time buyer, the 20% of newcomers.
22.
20%. What qualifies them as newcomers? 1 year in the country or 6 months?
So the difference, under 5 years. Yeah.
Okay.
Them to have, there's a date on PR card, that date cannot exceed 5 years. Yeah, and that 5 year is closing date.
And they still have to go through the same process of showing employment?
Same income, same down payment requirements, the only exception is credit.
I think it's employment, right? No? Employment is for me.
Sorry?
The guy didn't have a job, you remember you did, the newcomer?
That's 35% down.
Oh, okay. Okay, he didn't have a job.
Yeah. No, but that's a professional program. There's a program for it. Sorry? Still there, a little bit harder. Now they want documents to confirm you're an engineer. You're this and you're that. More documents, they keep adding more documents, that's all.
So like for no income requirements, no checking,
Forget that, that's gone.
that's not.
Yeah.
Any other questions before I end it? Download the app and play with it. You will look a lot more professional when you sit down, because that will give you an idea at least. You don't have to, chase your mortgage broker, you don't have to tell the client, go to the bank, do this, do that, no. You can do it right on your phone.
Are you selling the stuff, bro?
Sorry?
What's the name of the app?
The stuff, are you gonna sell the stuff?
I'm gonna send a summary. The summary will have it. Any other questions? Thank you for coming. Quick question. Would you guys like me to have an example of vendor take back? Yeah? Okay. So the summary I sent, I'll send an example in it, so you can actually see what the vendor take back should be maximum.
There's also no more than 8%. So, 50%, 40%.
Gone. 2017, forget.
Okay, that's all.